One sentence from the Treasury Secretary pushed oil down. One sentence from Tehran pushed it back up. And one sentence from the president, calling Iran unbelievably duplicitous, told you everything about how fragile this week's record-setting rally really is. Right now, every market you own is trading a single negotiation, headline by headline. And Monday, we warned you exactly this would happen. Today, you get to see what it looks like live. Here's the timeline. Monday's brief said the oil crash was a bet on diplomacy and that one headline could unbuild it in an afternoon. Tuesday was that afternoon in miniature. Stocks opened strong, the Dow up more than 1%, the S&P stretching for another record, earnings rolling in hot. Under it all, one question: is the Iran deal real? Here's the shape of this morning: the whipsaw, the tell and the tape, and the staircase that keeps climbing toward Friday's jobs number while everyone stares at Hormuz. First, the whipsaw. Treasury Secretary Scott Bessent said there is, quote, a chance we may have a deal today or tomorrow to reopen the Strait of Hormuz. Oil slid on the sentence. Within hours, Iran disputed that negotiations were even ongoing and crude snapped back, with Brent pushing toward $90 at points in the session. Then the president weighed in, calling Iran, quote, unbelievably duplicitous. Read those three statements together and you understand the tape. The market is not pricing peace. It is pricing the probability of peace, remarked every few hours by people who do not agree with each other about whether they are even talking. Monday's 5% oil crash assumed the diplomacy was real. Tuesday, the market discovered it might be partly a press conference. Second, the tell. Here is what matters for your money. Stocks barely flinched. While oil whipsawed, the Dow held its gains and the S&P kept hunting records, carried by an earnings season that keeps beating. Palantir's blowout Monday, a wall of reports Tuesday. That divergence is the tell. Equities are saying, we don't need the peace deal, we have the profits. Oil is saying, I am the one who gets hurt if this collapses, and I am not so sure. One of those two markets is better at pricing geopolitical risk, and history says it's usually the one that gets shipped through the strait in question. When oil stops believing a calm that stocks are still partying on, the honest read is, enjoy the party, know where the exit is. Third, the staircase is still there. Under the Iran noise, jobs week keeps climbing. Tuesday brought the job openings report. Step 2 of 5. Today brings ADP private payrolls at 8:15. Thursday, jobless claims. And Friday, at 8:30, the jobs number that settles the Fed fight we have tracked since last week. Hottest factories in 4 years on one side, crashing energy costs on the other, and a September rate decision hanging on which one Friday's number confirms. The Iran story and the Fed story are actually one story. If the strait reopens and oil stays cheap, the inflation hawks lose their best argument and September stays calm. If the talks collapse, oil reloads its war premium into an economy that just printed a 4-year factory high, and suddenly the hike case writes itself. That is why every barrel headline moves your rate expectations, your mortgage math, and the record highs in your retirement account all at once. What it means for your money, not advice, structure, 3 things. First, recognize what kind of market this is. A headline market. In headline markets, position size is survival. The gap between a deal announced and a deal denied is measured in minutes, and nobody trades it well, not even professionals. The right response is not prediction. It's exposure you can hold through either headline. Second, the record highs are earned by earnings, but insured by nothing. Profits are real, the rally is not fake, but its insurance policy, cheap oil, and a friendly Fed depends on a negotiation the parties can't agree exists. Records with no insurance deserve respect, not worship. Third, cash still pays roughly 3.5% while you wait for Friday. In a week where the referee arrives at 8:30 Friday morning, being paid to hold your decision until the data lands is not cowardice. It's the free lunch, same as it's been all week. Nothing here is financial advice, it's the map. Your money, your call. Today's question: when stocks ignore what oil fears, who do you believe? Blue pill, believe the stocks. Earnings are real, the economy is hot, and the Iran noise is diplomacy theater that resolves into a deal, because everyone involved needs it too. Red pill, believe the oil. The commodity closest to the risk is repricing it in real time, and equity markets at record highs are the last to hear bad news every single cycle. Blue or red below, and tell me, what would make you sell a record high? At noon Eastern today, 9:30 tonight in India, our special on the 12,000 TCS layoffs and what AI is really doing to India's safest job. Do not miss that one. Macro at 7, crypto at 9, AI at 11 every morning Eastern. We watch the forces. You keep the decision. The timeline keeps moving. We will see you in the next one.